right before break, we were talking about USDA financing and basically getting 100% financing. And heck, you put down some earnest money, and in some cases, then you talk about how you structured a deal, and they get their earnest money back at closing.
Most of them.
Yeah, most of them.
Yeah.
Wow. So then, how do you know if you qualify for USDA?
Well, obviously you have to apply. So you have to call me and you have to apply. And then, based on your credit criteria, there's limitations for USDA. One is location.
Yeah.
It's a rural program, so it can't be something in the inner city of Nashville.
Right.
The home doesn't qualify. And then the borrowers be more of a conventional borrower than they are a first-time home buyer.
Right.
So they have to have a little bit more credit criteria because obviously the guarantee is coming at 100%. So
Right.
the borrower is not vested in this loan at all.
Right.
So they need to be a little bit more credit worthy than your first-time home buyer. Your first-time home buyer, of course, are going to have a little skin in the game with a down payment.
Right.
USDA 100%, they're not.
Right.
And so it's just more of a conventional borrower in a rural area.
Let's say it's a first-time home buyer, and they haven't been out, from college, or they just recently moved out from the parents' house, and they just don't have that much. Can you use alternative trade lines like insurance, car insurance, cell phone bills?
Not for the USDA, because once again, that's not going to fit in a conventional type borrower. So it's not something we can establish credit off of things of that nature by saying, hey, I've been paying my cell phone bill.
Right.
A cell phone is more of a luxury than it is a commitment to pay. Plus, it's one of those things where they can just turn it off. If you don't pay the bill, they just turn it off.
Right. Now, what about the income piece? Because I know there's household income requirements versus your regular income qualifications with regular conventional or FHA loans.
Correct. There's limitations on this that, obviously people who move a little bit farther out can't take advantage of it, have a big six-figure income,
Right.
and finance 100%. Once again, those are borrowers who need to have a little more skin in the game. But it's based on household members as well. So there are income limits based on what area you're purchasing in. So if you're in Robeson County versus Sumner County versus parts of Rutherford, and then household members. So because we do have to count all household income.
Right.
So but it changes based on the age. Do you have dependents above or below 18 years old? Are they dependents on your tax returns? So we do look at all household income.
Yeah, I mean, I like the dialogue we have here because, a lot of people, there's that misconception about how much they need down. Can they get 100% financing? How does that all work? And to understand how the 100% financing does work.
Right.
And it's really not rocket science by any means, but at the same time, with somebody like you that understands USDA, and we're going to touch into VA here in a little bit as well, to be able to navigate a potential buyer through their options and give them the best payment possible with, in this case, with USDA 100% financing.
Right.
Coming back away from the closing table with the earnest money back, I mean, that's literally 100% across the board. I mean, it doesn't get any better than that.